Alright, chat, welcome back to another video. Or technically this would be our first video together. That sounds weird. I don't like the way I said that. This will be our first video, about trading at least. I also post gym content here. I might make another channel, explicitly for, like weightlifting and stuff, where I might get a different channel for trading, but I think I'm gonna keep this on a trading account. But yeah. Basically what my channel's about, I live trade. Like, as far as, like, I'm gonna document all my trades, no cuts, no edits, maybe as far as, like, intros or, like, after trades, but, like, during trades, no. No. When session opens, we're gonna press record, and we're gonna see what happens. We're gonna, like, if we lose money, we're gonna post it. If we win money, if we hit take profit, we're gonna post it. Today's video, breaking down my strategy, the strategy I use today to hit take profit, the strategy I use all the time to hit take profit. It's worked for me numerous amounts of times. It's the best strategy in my opinion. My strategy is based off of liquidity zones, liquidity sweeps, and confluences, like a lot of confluences. So, yeah, we're going to break down the trade I took today. We're going to break down where to set your take profit and your stop losses. We're going to break down the strategy I completely use. Like, we're going to break down all these steps. I wrote them down right here, so it'll be easier for you guys to write down if you guys are taking notes. And, yeah, let's get into our strategy. Alright, we're in the 4 hour right now. We want to be in a lower time frame to show you guys what we did today. We was cooking today, too, bro. Oh, my gosh, we was cooking today, dude. Bruh, look at this, dude. Hold on, let's go on a 5 minute. Look at this trade today. It was, like, dead serious, perfect. Oh, look at it, bro. Look how beautiful she is, man. Holy cap. I don't know why I said cap. Holy cow. Nah, she's beautiful, bro. Look at that. Look at these beautiful candles, bro. Alright, yeah, this is the trade we took today. Where's market open? We marked it earlier. We didn't mark it. Wow, okay. Market open, like, right here. There we go. Market open there. Price was grabbing liquidity, obviously, down here. It always does that when market opens. It always grabs liquidity before it moves in the direction it wants to go. Kind of like the best trade today, I would say so, as far as buying. Yeah, best buying trade. Looks like this would be the best selling trade today, for sure. I'm better at buying than selling low-key, but you should learn how to do both if you're getting into trading, for sure. But yeah, this is where we took our trade. We used all the strategies. I'll break down everything that I used, and I used every single one of them. And we were able to hit take profit. We were able to, look, our risk reward ratio isn't that good, but in my opinion, I think anything from a 2.5 to a 4 is pretty good. Anything below that, you're either risking too much or you're not risking enough. So yeah, today's take profit is 800, but we are on the not the eval, but I said eval. We're on the funded account. We're on the alpha futures funded account, 50k, 0 evaluation. I've been trading this account for 2 days. Look, we'll go to our stats right quick just to give you all a little insight or an idea of what this thing looks like. It tracks all of your trades. So we traded 2 days. We're up 1,200. We haven't lost a single trade, obviously, because we only took 2 trades. Yeah, so 2 winning trades. Profit factor, total gain in 2 days, 1,269. Average win to loss ratio, there's nothing here because I haven't lost anything yet, and hopefully I don't plan on losing anything for this evaluation. I'm trying to prove that, you know, I'm profitable. But yeah, this is the trades for this week, and this is the trades for last week. We didn't trade Monday because the whole Amazon surge thing was pretty weird. It was like messing up my charts quite a bit. It was making me lag a lot, so I decided just like not to trade at all. But alright, we are going to go into our strategy we use for the day. Break down each step and what each step means, and how you can use it, just like how I did, to hit take profit. We're gonna start off with number 1, find our bias on the 4 hour. Alright. So, the first thing that I always do when I look at the chart before market opens, so timing is a big thing. I live in Arizona, so I trade New York session, meaning we are 3 hours behind New York time. So I trade from 6:30, anywhere from 6:30 to like 10:30, 11:30 my time. And normally I only take 1 to 2 trades a day because they're they're trades that I always get correct, so I don't really need to take that many trades. I have a live account as well, but I'm like too scared. I'm too scared to record on a live account because I don't want anything to be like leaked. I guess I don't really care if anything gets leaked in here. Like take my money. I don't really care. It's an eval, but um, yeah, I have a live account that I trade on too. I don't trade as much on the live account that I do on the funded account because I'm trying to rack up a bunch of funded accounts, kind of like copy trading. But that's a thing for people that know what they're doing. And if you guys clicked on this video, you guys obviously don't know as much as me. I'm sure you guys know something, but not as much, I would say. All right, so let's get into what I did. I wake up at 6 o'clock. I'll take my shower anywhere between like this doesn't matter, but I'm just taking you through my routine in the morning to get me prepared for trading because I do think trading is a very emotional thing if you make it emotional. If you don't make it emotional, that's better. I wake up, take my shower, drink some water, pretty much, like your normal routine, and then listen to music. I think music is something anybody should do before getting into anything. You know how NBA players listen to music or football players listen to music before they even do anything, or get themselves hyped. It's kind of like the same concept, I guess, in that way. But yeah, I'll kind of just calm myself because you don't want to be emotional going into trading. Especially if you lose money, like that's a big thing. Like people will try to be able to gain back their money and enter very stupid, and they'll lose more money, even more money than they lost. So yeah, I kind of just like steady my mind, get myself ready for the day. If I lose a trade, I lose a trade. Normally I only take 2 losses a day, and then I'm done for the day. But if you're just starting off a funded, I would say win 1 trade a day and lose 1 trade a day, and that should be it. Like if you win the 1 trade, good, get out of there. If you lose the 1 trade, get out of there. My number 1 advice is do not revenge trade. Revenge trade meaning you lost money and you try making that money back so you can break even, and then you end up losing more money, or your account can get liquidated, stuff like that. Um, so yeah, I feel like that's a good thing to keep in mind. Write this down too. I feel like if you guys really want to understand it better than me just explaining it, it's a good thing to write down. So pause the video, write this down, and I'll explain to you like everything. I'll break down every single thing. But yeah, just make sure your mind is ready for the morning or for the day, even. Make sure you're settled in the same spot because you're gonna be sitting there for a minute, just being patient. Like the whole point of trading is being patient and knowing your strategy to a T, like 100%. But yeah, let's get into step 1 of my strategy, or what I would do when I first look at the charts, right? So 10 out of 10 times, I'll always check the bias for the day. What is the bias? Our up and down trend. So here, let's go up here. Drew some stuff out for you guys so you guys can see. I'm more of a visual learner, so I'm sure you guys are too. Yeah, so this is the trend. This is our uptrend. And this would be our downtrend, just like this, right? If you don't know what a trend is, a trend consists of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, etc. Just going up in that upward direction. That is an uptrend because we are moving up. Downtrend is lower low, lower high, lower low, lower high, lower low, lower high, lower low. That is our downtrend because we're moving down. And this just means our bias. So if our bias is going up, that means we're in an uptrend. If our bias is going down, consists of lower highs, lower lows, then we're in a downtrend. Yeah. Uh-oh. I still got the thing equipped, do I? Yeah. Okay, let's change that. Okay. Alright. So, on the 4 hour, I'll normally... Not normally, I always will. You guys should always be doing that too, because that's like the number 1 thing any trader should do. Like, genuinely, anything. Or not anything. Everything. I don't even know what I'm saying. Just make sure you're checking your bias on the 1 hour. Check your bias. Check if we're in an uptrend. Check if we're in a downtrend. So, what I did today, is I always kind of mark out previous days' session opens, as you can see from these horizontal lines. Some of these horizontal lines are just there because I don't even know what I was doing earlier. Let's get rid of some of these. Where did this open? Okay. Yeah, this was marked out in the 6 o'clock candle. I need some water, dude. I'm freaking thirsty. I cannot speak right now. My voice is so dry. But this 6 o'clock candle to this 10 o'clock candle is marked out just because we're in the 4 hour. But if you If you scale down to the 5 minute, it's actually marked 9:30. This is the session open from yesterday. So I'll check the previous day's bias. Sorry, I don't know why I can't talk today. I'm like actually gonna get some water right now. Dude, my mouth is so dry. I took a nap after I was done trading. The best thing you can do, bruh, or the best feeling you can have is whenever you go through a trade and you hit take profit and you can go back in your room and take a nap, dude. It's the best feeling. And then you wake up and you're like, was it a dream? And you go back to your computer and you're like, oh no, I actually hit take profit today, and I can actually like be satisfied for the day. Wow, that water's good. All right, we're feeling better. We're feeling refreshed. Let's come back at it again. All right. So scale down or scale up. Scale down. Scale down to your 4-hour time frame. We're gonna scale down to our 4-hour time frame. Check our bias for the previous day, because we're gonna look at this before market opens. These are some of these steps are gonna be taking before market opens. So we were in an uptrend, or we were in a downtrend for most of the part, and then we kind of we're in this uptrend here, and we're gonna take our previous. If we're in an uptrend, we're gonna take that like information before we take what was happening before, because it's the closest to us. So we were in an uptrend, and how step 2 works is we're checking for alignment on the 1-hour, meaning if our 4-hour is in a line, we're gonna scale down. Like if 4-hour we're in an uptrend, right? And then we scale down to the 1-hour, and we're also in an uptrend here. Then we're in alignment, right? We're aligned with a 4-hour. We want both of them to be aligned. We want the 4-hour to say we're in an uptrend. We want the hour to say we're in an uptrend. So, if they're not in an uptrend, there's different stuff for that as well. But we'll go into that right now, actually. So, here, let me try to find an example, actually, so you guys can have a better idea. Actually, no, we already drew it out. So yeah, so first step, check our bias for the day, see if we're in an uptrend or downtrend. Once you find whatever trend you're in, for example, we were in an uptrend. This is the hour time frame, but from before, in the 4-hour, we were in an uptrend, and once we figure out that we're in an uptrend, we're going to scale down to the 1-hour time frame, and we're going to check if the 4-hour bias is in the same direction as our 1-hour bias, vice versa. If the 4-hour bias is uptrend, we're going to scale down to the 1-hour, and we're going to check if it aligns with our 4-hour. So, you might be asking, like, well, what if they don't align? What if my 4-hour, we'll go up here. What if my 4-hour, we're in an uptrend, and then I scale to the 1-hour, and it's like, oh, shoot, we're in a downtrend? Well, we have different things for that. Here, let me use a different box to try to type this out. Left. If our biases don't align with each other, we're using different time frames for both. So we're using a different time frame for if the two biases are aligned, but if they're not aligned, we're going to use a different time frame. So, let me try to write this out. I'm trying to think how I write this out. Let me see. Okay, I got it. If our 4-hour doesn't align, no, we don't like red squiggly lines. Sorry, this has to be correct. Doesn't align with hour. I cannot type for crap. I'm using 2 fingers, by the way. I cannot type at all. 1 hour, we scale to higher time frames. Let's do 15-minute. Boom, boom, boom. If our 4-hour, does align with our 1-hour time frame, we scale down to lower time frames. The 5-minute. I'll break this down for you guys too, what this means. Alright, bit of a big one here. Pause. Yeah, so if our bias for the 4 hour and our bias for the 1 hour do not align, we're going to be using the 15 minute for our breaker structure. Here, we'll do do one of these. So it puts just like that. Alright. If our two biases from the 1 4 hour and 1 hour don't, okay, don't align, we're gonna use the 15-minute time frame for our break of structure. What was I trying to do? If our two biases from the, if they don't match, we use 15-minute time for our break structure and 15-minute time frame for our confluences. This is why you guys don't drop out of middle school. No, I'm just kidding. We're graduating high school, buddy. We're still in high school, actually. I'm not even 18 yet. And I'm teaching you guys how to trade. Man, that water's good. 15-minute for our confluences. And then the 5-minute for our entry. Alright, that's if they don't align. Right? That's if they don't align. How do I move this? Move. Get over here. Get over here. We're going to do the same thing, but the opposite. If our two biases do align, we're gonna use the 5-minute time frame for our break structure. The 5-minute for our confluences, and the 1 minute for our entry. Alright. Perfect. Alright. Yes. So what we're gonna do for step 1, check our bias for the day. On the 4-hour time frame, your time frame is gonna be up here. There's this little drop down menu. You can star these so that they stay up here. These are my settings for my time frames. I star the 1 minute, 5 minute, 15 minute, 1 hour, 4 hour. You can even do 30 minutes for certain things. I don't ever use 30 minutes or any of the other ones. The ones I have starred are the only ones that I ever use. So if you want to use that for your settings, go on ahead. But our first step we're going to do before we even do anything, actually, before we even check the bias for the day, we're going to mark out when market opens. We're going to scale down to the 5-minute time frame. And as you can see down here, there's like a little gray box at the very bottom of my screen. You see it moving with time. I always mark out 9:30 on the 5-minute time frame. So we did it here. I forgot to do it earlier though, low-key. Always do that. Always mark out when your market opens, or your session, I meant. Because then you'll know, oh, my candle's up and up, or up and available. You get what I'm trying to say? Like, you mark it out, and that's when you know your session has opened. So I always do that before I even start trading anything. I always mark it at 9:30 because that's when the candle moves on New York session. So after I do that, I scale up to my 4-hour. This is super wobbly. Wow. I need to invest in a freaking mouse, dude. This is so sketchy. Yeah, check our bias for previous days. As you can see, we were in a downtrend from yesterday, or not from yesterday. This was from, some of this was from Monday, I think. I'm pretty sure. No, this is from 2 days ago. Okay, even better. Wait, no, this is from wait, what? This is from 10 days ago. What the heck? No, it doesn't matter. We'll just check. The whole point of checking your 4-hour bias is checking to see what your previous day is. It doesn't matter if it was yesterday, the day before, 5 days ago. Just checking your bias to see what the market is moving or what direction it is. So, as you can see here, we're moving an uptrend. This is our previous trend on the 4-hour. And after you check your high time frame, or your lower time frame, sorry. Check your lower time frame to see what your uptrend is in, or any trend. As you can see here, we're in uptrend. After you check that, you're going to scale down to your lower time frame, your 1 hour, and you're going to check to see if you're also in an uptrend. So for example, for the 4 hour in an uptrend, we want to check the 1 hour to see if the 1 hour aligns with that 4 hour. Meaning, if we're in an uptrend 4 hour, we want to check the 1 hour to see if we're also in an uptrend. If so, it's a good sign. If so, we're gonna be going down. Where's it at? Where's it at? If so, we're gonna be going down this route. So if both of our biases align, we're gonna use the 5-minute time frame for a breaker structure, and the 5-minute for our confluences, and then the 1 minute for our entry. But if they don't align, for example, here, this is a perfect example right here I drew out. If the 4 hour, we're in an uptrend, and then you check the 1 hour, and we are in a complete downtrend, then you're going to be using this box right here. This is the only time frames you're going to be using if they don't align, and then if they do align, this is the box you're going to use if they do align. Feel free to write any of this down, like pause the videos at any point, write any of this down as far as in your notes. You guys should always be taking notes. I think notes are the most crucial points. Some of the key points of trading. I take notes every day whenever I trade. I write down what I can do better. I write down what I didn't mark out, because, not all days are perfect. Even though I don't lose a lot of days, like I barely lose, I'm going to be honest. I don't lose a lot, because I don't like losing. So, the whole point of what I just said is just, journal. Yeah, so if we don't align with each other, if we're in an uptrend here on the 4 hour, and we check the 1 hour, and we're not aligned, we're going to be using the 15-minute for our breaker structure, the 15-minute for our confluences, and then the 5-minute for our entry. But if they do align, let's say it's an uptrend for 4 hour, the 1 hour is also an uptrend, we're going to be using the 5-minute time frame for our breaker structure, and the 5-minute for our confluences, and then the 1 minute for our entry. So the time frame are different, and that's based off of, because they're going in opposite directions, meaning it's easier to hit certain points or confluences when it's on the 15-minute, and you don't really know where price is going to go because they're going in opposite directions. So, after we find out what time frames we're going to be using, we're going to be marking out our liquidity zones on the 1 hour. Now, you might be asking, well, what if the 4 hour and the 1 hour don't align? Do I still use the 1 hour? Yes, you do. You still use the 1 hour to mark out your liquidity zones. And then if you're also wondering, well, what if they both align? You still use your 1 hour liquidity zones, your 1 hour time frame to mark out liquidity zones. So if your bias for the 4 hour and hour don't align, it doesn't matter. And if they do align, it absolutely does not matter. We are going to stay on the 1 hour for marking our liquidity zones. And liquidity zones, you might be asking, this is why I always mark out what time the session opens. It says 9 o'clock, but we're in the hour time frame, so I was just going to skip forward. In between these two are really our mark for session open. But what liquidity zones is, I actually did a representation. Oh my gosh, I cannot speak today, dude. I'm just stuttering. Holy crap. I actually marked it out here. Liquidity zones are areas in the market where a bunch of orders are resting. So, liquidity zones in an uptrend rest below these lows, and liquidity zones in a downtrend rest above highs. So if we're in an uptrend, we're going to be looking for lows in an uptrend, and if we're in a downtrend, we're going to be looking for liquidity zones in higher highs. Does that make sense? Not higher highs, but highs in a downtrend. So I'll show you an example of what I marked out on the chart today as far as liquidity. Normally liquidity zones will be before market opens, or even during market. It doesn't really matter. But whenever session opens, it always grabs liquidity. In either the uptrend or downtrend, it doesn't matter. It always grabs liquidity. That's what happens when session opens. It spikes kind of crazy. But yeah, remember that liquidity rests below lows in an uptrend and above highs. Yeah, I marked it out here. Mark out 1 hour liquidity zones, lows in an uptrend, highs in a downtrend. If you don't know what lows and highs are, go look up anatomy. Candlestick anatomy. It's basically, this is a high. I'll show you right now. I'll give you a brief explanation of each. There we are. This is a high. This is a low. Right? So liquidity is going to be down here. Liquidity is going to be down here. If we're in a downtrend, liquidity is above highs. If we're in an uptrend, liquidity is below lows. And if you don't have any questions, feel free to ask me in the comments if you don't understand. I'll try to answer them to the best of my ability. I probably will be able to answer them. So if you have any questions, please ask me. I'd love to answer them. because I'm very passionate about trading. I love trading. It's one of my favorite things to do. Besides, like, traveling and actual other stuff, like going to the gym and stuff. But, yeah, remember that liquidity zones rest. They're not going to be like right here where I'm putting it at, but I'm giving you an example where liquidity is going to be at. Liquidity rests below lows and above highs, below lows in an uptrend, and above highs in a downtrend. And we're going to mark that out on the 1 hour time frame. It doesn't matter if you're biased on the 4 hour and the 1 hour line. It doesn't matter if you're biased for the 4 hour and 1 hour don't align or do align. It doesn't matter. We're always going to be in the 1 hour time frame whenever we're marking out liquidity. Liquidity. Yeah. Let's see. So, perfect example here. Market opened right here. Marked it out in this horizontal line. I checked what my bias was for the day. Both aligned. We were both in an uptrend. So I scaled down to my 1 hour after checking if they both aligned. And I marked out my liquidity for the day. And this was even before market opened. As you can see here, market opened here. And this candle that I marked out was before market opened at all, right? Market opened here. We'll mark out this low because we're in an uptrend. So we mark out lows on an uptrend. And if we were in a downtrend, we'd mark up highs. Meaning a high is a move up, then a move down. And a low is a move down, then a move up. And then we're going to mark out the highest wick of these two candles. So you're like, well, let me see. Let me find an example somewhere. Okay, there's no really example here. Oh, here's an example. Well, if this is a low, don't you mark out the red part since it's a move down, then a move up? No, it doesn't matter. In these two candles, it's the lowest wick of these two candles because these two candles act as one because it's a low. So yeah, a high is a move up, then a move down. Our low is our move down, then a move up, right? So we're going to mark out our liquidity on the 1 hour. So if we're in an uptrend, we're going to mark out our lows. So this is where the candle, let me see. This is where the candle was at. None of this even happened. None of anything past here or any of this happened yet. So it was just this candle and back. And I marked out my liquidity on the 1 hour, right? Market opened. Market grabbed liquidity down here. I'm talking like a caveman. Market opened here. Swept these liquidity zones down here. Completely swept them. I mean, we went way past it. Perfect. That's the perfect thing that we want for the beginning of our trade. That's how you know that what you're doing is very correct, right? So after we mark out our 1 hour liquidity zones, like I said before, I said it like 10 times. Lows in an uptrend, highs in a downtrend, right? We wait for liquidity to be swept. This is very important. Very important. You have to have patience. Just because you see it skyrocket and it doesn't hit liquidity. Just because you see it skyrocket and it doesn't hit your liquidity zone, that doesn't mean you enter. You have to be patient. Trading is all about patience. I promise you, if you can learn the skill of having patience, you'll go a long ways. You'll go pretty far, because that's literally what trading is all about. So we're just gonna wait. We just wait. We wait for our zone to be hit, and I always mark it out with these lines here. These are the only tools I ever use. It's a horizontal ray, and then our long position, short position, our rectangle, and then our vertical line. Alright, this is horizontal, this is vertical. I have these two mixed up. This line I meant is vertical. These are the horizontal lines I used. I don't know why. And I always type the lines in, so here, I typed in breaker structure for short is BOS. And then fair value gap is, we'll get into that later, but those are confluences. You have to have patience, though. That's what I was talking about. You have to have patience while trading. Just wait for that 1 hour to get pushed past. And yeah, after we do that, after that zone was hit, based off of, let me see here. The next step is scale down, oh, that says dawn, scale dawn. Scale down to the 5 or 15 minute based on what? What, Timmy? Based on what? Based on our bias for today. Based on if our bias are the same. Exactly, perfect. What Timmy was trying to say is that after our liquidity was swept on the 1 hour, meaning after it was pushed past that line that you set. So here, look, example here, right? Let's say market opens. Let's say market opens here, right? Don't mind this one, right? Let's say market opens here. This is the exact perfect example that happened today. This is the exact candle. It's not really a candle, it's more like a line, but this is exactly what happened today, right? We marked out. This is when market opened. None of this happened yet. None of this liquidity and this skyrocket to the upside happen at all. We mark it. Whoa, 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 whoa. Okay. Whoa, they're hacking us, guys. No. I don't know what that was. That was really weird. We wait for. Sorry, what was I even talking about? Oh yeah, market opens here, right? We mark that out before we do anything. Whether that candles has opened yet or not, we'll look at the 5 minute. We'll find the time down here. You see that little box? We'll look for 9:30. On the 5 minute time frame, and we're going to mark it out whether that candle is there or not, whether there's nothing there or not. We're gonna mark our liquidity for the day, whether we're in an uptrend like we were here, so we marked out a previous low, or we're in a downtrend, which means we'll mark these previous highs, these previous highs. We're gonna mark those out. Yeah, we're just gonna have patience. We're gonna wait for market to open. We're gonna wait for it to grab those levels, and then it's just gonna reverse. Like that's always what happens. At least most of the time. Right? So once our liquidity was swept, you're like, oh my gosh, what do I do next? I don't know what to do. Don't freak out, Timothy. Based on our bias for the day, meaning like we talked before, if our 4 hour and our 1 hour do not align, we're going to take this bubble right here. We're going to take this bubble for everything that it says, but if they do align, we're going to take this bubble. Does that make sense? Okay? So after our liquidity was swept and they do match, we're going to scale down to the 5 minute and wait for a breaker structure. If it doesn't align, and our liquidity was swept, we're going to scale down to the 15-minute time frame up here. They're two different things you're going to be looking for, okay? Based on your bias, based on if your 4 hour and your 1 hour time frame match. And if you don't understand some of these terms, look it up. Go do some research on those. I'll break those down in different videos because it's kind of a lot to break down in one video. But yeah, we're going to have patience on the 1 hour. We're going to wait for our liquidity to be swept on the 1 hour. We're going to have the best patience in the world because that's what patience and trading is all about. And we're just gonna wait for liquidity to grab those zones. And what liquidity is just resting orders, meaning orders are down here that are being placed, or down here that are being placed, and most likely zones are gonna come back and retrace in that zone and go in the opposite direction. The water's so good, dude. Yeah, we're gonna be patient, wait for that zone to be hit. Based on our bias for the day, we're gonna go with either of these two. So for today, for example, both of the 4 hour and the 1 hour bias aligned with each other. So we're going to scale down to the 5 minute time frame and wait for a breaker structure. Now, what is a breaker structure? I will explain to you right now. Alright, so if your biases don't align, 15-minute breaker structure. If they do align, 5-minute breaker structure. So our liquidity was swept right here. This is the perfect example. We marked it out on this candle. This is our previous low from before when market was open. We marked that out, and then we'll type in this line, liquidity. We're gonna wait for that to be swept in the 1 hour. We're like, cool, liquidity is swept. What do we do now? Both of our biases aligned. Our liquidity got swept in the 1 hour. We're gonna scale down to the 5 minute. Let's zoom back out here, and we're gonna wait for a breaker structure. Okay, so how the time frames work is how long a candle is open for. So as you can see, there's a lot more candles here because each candle is open for 5 minutes. 1 hour time frame, each candle is open for an hour. That's how the time frames work, depending on what your strategy is. My strategy, these are the only time frames I'll ever use. Okay, right? So we wait for our liquidity to be swept in the 1 hour. We're gonna mark out our breaker structure, and you're like, how do you mark out a breaker structure? Well, this is what a breaker structure is. I'll show you right now. Let me see. Let me get my pin out. Right. Boom. Wow, that's really scraggly. Boom. 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 There we go. Doesn't get any better than that. Yeah, so this is what happened here. Right here. We had this downtrend, or not downtrend. We had this higher low. Went to a higher low again. And then we had higher highs. Right? Same thing we did here. So we went boom, 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 up. Boom, 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 up. Right? How do you mark out your break structure? Perfect question, because we're going to answer that right now. Right? Our breaker structure is when we break to the upside, meaning going to the opposite direction. And how you know when we're about to go into a breaker structure is we're going to mark out, look, beautiful right here, watch. Boom. Okay, don't mark that out. I don't know why I'm making noise like that. Don't mark that out. We're in this downtrend, right? None of this has happened yet. We don't even know this is going to happen. But we can predict it. We can predict it. I shouldn't be using the word predict because people are going to be like, well, trading's gambling. It is not gambling, bro. Oh my gosh. I hate when people say that. It's so annoying. because trading is not gambling at all. It is not. It's a high leverage skill that everybody should learn because, not everybody can do it. And the people that can do it, hats off to you. You're going to become a millionaire one day if you really know what you're doing. Anyway, I ranted off. But how do you mark your breaker structure? We're going to mark out our previous high. What was our high again? A high is a move up, then a move down. We had a high right here. It's not a move down, then a move down, or a move up, then a move up. It's a high is a move up, then a move down. What is our low? A low is a move down, then a move up. It's not a move up, then a move up, or a move down, then a move down. A low is a move down, then a move up, right? So we're going to mark out the most recent one. So not the high from up here, the most recent one. So if this is our candle right here, liquidity was just swept. We're going to scale back down. We're not going to scale back. We're going to look back on the candles we just had. We're going to mark out our previous high. So the previous high is this move up, then move down, and it's the highest wick of those two candles. So this would be your wick, this would be your wick, this would be your wick, and it's the highest wick of those two candles. We're going to mark out the very tippy top of that, right? So, for example, this would be our breaker structure. We're going to mark that out. Boom, boom, bada boom. We're going to mark that out, and then we're going to wait, depending on what time frame. If our bias is aligned, 5 minute, meaning we're going to wait on the 5 minute time frame for this to break above this. And how do you know when the breaker structure happened? Is when a candle closure in the opposite direction closed above this. So we mark it out. You're like, well, why do you mark it out? What's the point of marking it out? The reason for marking it out is because we're waiting for a candle closure above this previous high, right? So here, we were going in this lower low, lower high, lower low. We marked out this previous high, and then we wait for a candle closure above that. So this candle closed above here, or above this high, but closed up here, right? So let's say, for example, we start to move up in the opposite direction. You don't wait. This doesn't count as a breaker structure. This candle right here, because there's no candle closing above this area that we marked out. Does that make sense? So if we marked out this, and none of this happened yet, and we start to move up in the opposite direction, this does not count as a breaker structure. This doesn't count as a breaker structure. We wait for the candle to close. You have to wait for the candle to close, because if you don't and you're impatient, this could easily go back down. And you're like, well, I thought my breaker structure happened. I don't know what happened. The market's just weird. No, you didn't wait for that candle to close above it, above that breaker structure we marked out, right? So that is how you know a breaker structure happened. And how do you know if it happened on the downside? We'll look for whenever, like if we're in an uptrend here, right? It doesn't have to always be when liquidity swept. There's breaker structures all the time, right? We're going to look for our previous low, meaning a move down, then a move up. And we're going to mark the lowest point of these two wicks. And then we're going to wait for a candle closure to close below that previous low. So, yeah. I don't know. I had a brain fart. But yeah, if we're in uptrend for a breaker structure, we're going to look for a previous high, mark the candle wick. That's the highest out of these two candles. And we're going to wait for a breaker structure to the downside and a candle closure below it, meaning we're going to wait for this candle to close. We're going to wait for this candle to close and a new candle to open. And that'll give us our idea if we broke structure or not. Does that make sense? If you don't understand, ask me in the comments. I'll break it down even more simple. But yes, this was our breaker structure. We marked out our previous high. Move up, then move down. We mark that out. We're going to wait. We're going to wait. We're going to mark it. We're going to type this as our breaker structure. We're going to be like, boom, boom, boom. You don't have to write break of structure. BOS is short for breaker structure, so I just always type that. After we do that, we're going to wait for this candle to close above it, right? Because that's a confirmed breaker structure. And then we are going to get into our next step. Let's go back up here. Wow, this is very terrible. I don't like this. Okay. Wow. Give me 1 second, chat. Give me 1 second. We're kind of like all over the place. All right. After we check our bias for the day, right? We're going to go through everything again after each step. We check our bias for the day, 4 hour. Uptrend, cool. Go to the 1 minute. Check if it aligns. If it aligns, perfect. We're both in uptrends on the 4 hour and the 1 hour. Based on if they align or not, we're going to be in the 15 minute. If they don't align, 15 minute. If they do align, 5 minute. Or these two boxes. Let's see. Let's go back up here. I know it's annoying, but you're new and you need to get this through your head. If they don't align, look at this box. Write this down. If they do align, you're going to write down both of these, by the way, because, market's not always going to be this one. Market's not always going to be this one. It's going to be both. Okay? So, if they don't align, we're using this box. If they do align, we're using this box. Okay? And always use ChatGPT, bro. ChatGPT can help you with so much, like, genuinely. If you don't understand a term, ask ChatGPT to dumb it down for you, like, really. Like, it sounds, like, it doesn't make you sound stupid or anything. Like, you just don't understand it. After we wait for our liquidity to be swept down the 1 hour, we have patience, right? Lows in an uptrend, highs in a downtrend. That's what we're going to mark out with our horizontal lines. Yeah. After that, we're going to scale down to the 5 or 15 minute, wait for a breaker structure based off of what, Timmy? The biases for the day. Perfect. If they align or not. Perfect, perfect. Right? After we do that, once liquidity and breaker structure have been hit, we look for a third confluence. Either that's a order block, fair value gap, inverse fair value gaps are the only three that I ever use. There's other ones you can use. There's SMT divergence. There's the 79% closer on the Fibonacci retracement scale. Those are like, that's like kind of more advanced stuff, more intermediate stuff. If you know what you're doing, then you'll understand what I'm talking about. If you don't understand that, look it up. These are the only things I really use. I only use order blocks, fair value gaps, and inverse fair value gaps. These are all, and IFVG is short for inverse fair value gaps. Today we only used fair value gaps. We only marked out our fair value gap. We should have marked out an order block, but I didn't think it was going to retrace back to order block. This sounds like I'm talking nonsense, but I promise it'll click. One of these days, you're going to look back at my video and be like, wow, all that really clicked. And it all happens in 1 second. I'm not even kidding. Like, once you understand everything and, like, each definition and how everything works, it clicks. It literally clicks, and you can read the chart like it's music notes. So yeah, once we wait for our 1 hour liquidity zone to be hit, it goes into that zone. We're gonna wait for a breaker structure to the opposite side, right? So if our liquidity, I had it up here. Perfect example. This is literally what happened today. I said it 10 times, but let me say it again. Right? Market opened here. We marked our liquidity zone before market opened. And it doesn't have to be before market opens. Liquidity is going to be grabbed throughout market. I always mark it before, just because the market always grabs liquidity. Right? We mark it out before. We wait in the 1 minute, or sorry, the 1 hour time frame. Wait for it to be hit. We scale down to our 5 minute, 15 minute based off of these two. And then we're waiting for a breaker structure. Breaker structure will always be to the opposite side of that liquidity. So if liquidity zone is down here, it's going to go in the opposite direction. We went down here. Liquidity was grabbed. It shoots up the opposite direction, right? If we're in a downtrend, let me see. How do I gotta write this? Okay. We're gonna go here. Boom. 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 Perfect. That's perfect. That's a beautiful drawing. Don't make fun of me, guys. So if we're in a downtrend, we're gonna mark out previous highs. Boom. Here. Liquidity pushed past this, and our breaker structure was to the downside, meaning we went the opposite direction, right? So, liquidity rests above highs in a downtrend and below lows, like we talked about before. We're going to mark out previous highs before, like stuff that's already happened. That's why it's called previous highs. We're going to wait for liquidity, if we're in a downtrend, on the 1 hour time frame to be swept. We're going to wait for it to go back to that zone. Then, once it hits zone, we immediately scale down to the 15 or 5 minute based off these two, right? And then we're going to wait for the breaker structure. Once we see the breaker structure, right? Breaker structure to the downside, we mark out our previous low. We mark that out. We wait for a candle closure past that marked out area, right? We don't wait 10 years after. We don't wait 15 candles after, or we don't wait until before it happens. We wait just one candle closure past it is all we need. That is our breaker structure. That is when we know our structure has been broken. And yeah, does that make sense? I hope it makes sense. If you don't understand, ask me in the comments. Please ask me questions. Type as many things as you need as you don't understand, and I'll make a video on it. I'll literally make a video on it, going into more depth, because this is more of a altogether my strategy that I use today, okay? So please ask me. I'll make a video on it, going into more depth if you don't understand. But yes, right, what were we talking about? What were we? So step, what were we on? Right. We wait for our breaker structure on the 15 or 5 minute time frame. After that happens, we're going to mark out our third confluence, whether that's an order block, fair value gap, inverse fair value gap. If you guys don't understand what that is, go look it up. Literally, it's not that hard to understand. It really isn't at all. Learn one term at a time. I always tell this to anybody that's new to trading. Try to learn one definition at a time. It'll make your life easier than trying to learn everything at once, right? We're gonna get rid of this here. Yeah. Okay, what's this for? I don't even know. Alright. So, once our breaker structure was hit, right? Perfect example here. Breaker structure, boom. Previous high. Our candle closed above it. Perfect. After that, we're going to mark out our fair value gap, right? So, a fair value gap is basically the gap between these two giant candles. So, the big move up, it's a gap between a bunch of candles, right? So, our fair value gap in this sense, in this downtrend, would be this one. We mark out the lowest point of that wick and the highest point of that wick, and that is our fair value gap. Or, you know, how depends on what the fair value gap is. In this sense, I only marked it out You can mark it out up to here. It doesn't matter. It really doesn't matter at all. We just really want to see a breaker structure out of that zone, what we did here. That sounds confusing at first. I understand. I understand, man. I promise you, I was in your shoes one day. Or not one day. At one time. So yes, our fair value gap is the gap between these two, a big move up or a big move down. It can be both ways, right? So this isn't our fair value gap, sorry. This is our fair value gap, and we're going to mark out the highest point. We're going to use our rectangle. We're going to mark the highest point of that wick to the bottom point of that wick, meaning right here, right? And then we're going to label that fair value gap. You may be thinking, why didn't it go right here? Because we didn't use our other confluences here. We didn't use all of our other stuff here, so it doesn't really work for here. But it absolutely worked for this one. Beautiful, beautiful. Our fair value gap had a beautiful retracement. So we're going to mark that out, meaning none of this has happened yet. We're going to wait for this to close. Once it's closed, boom, we immediately mark out our fair value gaps on the 5-minute time frame. Confluences depend on their bias for the day, meaning if your 4-hour and your 1-hour did align, 5-minute confluences, 5-minute breaker structure, 1-minute entry. So let me say that again. If your 4-hour aligned with your 1-hour, you're going to mark out your 5-minute fair value, or not fair value gap. What am I talking about? You're going to mark out your 5-minute breaker structure, and then your 5-minute confluences, whether that's a fair value gap, order block, inverse fair value gap, on and on and on. Confluence is just like, they're just little things that you mark out, kind of like a confirmation that it's going to happen, or that, candles are going to go back to that zone. How you read a chart is you just mark out. If your markouts don't work and none of it hits your zone, then you're either doing something wrong or the market moves weird sometimes. It really does move weird sometimes. Not everything's going to go to plan. That's just how life is, you know what I mean? So, yeah. 5-minute breaker structure, 5-minute confluences, whether that's a fair value gap, order block, inverse fair value gap. If they don't align, 4-hour and 1-hour, then you use a 15-minute breaker structure, meaning you're going to mark the breaker structure out on the 15-minute time frame, and then your confluences on the 15-minute time frame as well. And then you're going to enter on the 5-minute, not on the 1-minute, the 5-minute, because you're using lower time frame to enter because we didn't know where price was going to go because they're going opposite directions of each other in the 4-minute hour. All right. After that, we mark it out. You can use an order block. An order block is a red candle before a bunch of move-ups. It's the dumbest way to dumb it down. That's our order block, right? So this was our order block. The highest wick of this candle and the lowest wick of this candle. We're going to mark it out. We're going to type in our... Whoa. Tech. We're going to type in our boxes order block. I always use OB. I always use abbreviations. Okay. Don't know what's happening here. Oh, yeah. Center. There we go. I always keep it to the center. Center, middle. That's how I keep my settings for my my rectangles. Inside center is what I always do. After you mark these out, you should always mark out your order block. And your fair value gap will always come after your order block, because an order block is basically where a bunch of banks and a bunch of people placed a bunch of orders, and it was this candle before a bunch of move up, right? So how do we check that? On a downtrend, this is obviously an uptrend. It'll be a red candle before a bunch of green ups, a bunch of move ups, green candles. How do we check that on a downtrend? It'll be a green candle before a bunch of move downs. So in a downtrend, boom, order block. Oh, boy. That is our order block, right? We're going to mark that out, and then we're going to mark out our fair value gap, right? We're going to mark these two out. This just happened, right? None of this has happened yet. This just happened. This just closed, right? None of this candles has happened yet. None of this green one, this red one, green, red. None of this happened yet, right? We're going to mark out our confluences. These are called confluences. We're going to mark it out on the 5-minute, and we're going to wait. We're going to wait for price. So what we did, what price did was close this candle, and we're going to wait for a candle closure to come down into these zones, what we marked out, right? And normally there's like a little line. Normally there's actually not a line there. See, my settings are different. Look, let me show you how I have that setting set up. Settings. Where's it at? Style. Middle line. Mark that off. Mark middle line, okay? Basically what that's going to do is going to create a dotted line. Sorry. Excuse me. It's going to create a dotted line between a perfect... it's going to cut the rectangle right in half for you. And what you want price to do is you want it to come back into that zone, right? Come back into that zone, whether that's, on the 5-minute or 15-minute. That depends on what, Cheryl?
Well, it depends on if your 4-hour and 1-hour bias align with each other.
Oh my gosh, A+ student. We love you, Cheryl. Even though you're pretty fat, you need to stop eating some food, bro. Save some for the rest of us. But yes, Cheryl is absolutely right. We're gonna wait for the candles to come back into our zone. Based off what Cheryl said, if our 4 hour and 1 hour time frame align, so 15 minute, we're gonna wait for it to come back in here. 5 minute, wait for it to come back in the zone. Once it comes back into our midway zone, or even past it like it did here, perfect. It hit our order block. Oh my gosh, beautiful. Picasso, okay? Picasso. What are we gonna do next? Oh my gosh, bro. I need to get a mouse, dude. This is so sad. Right? We're gonna scale. Once liquidity and breaker structure have been hit, we look for a third confluence, right? Order block, fair value gap, and reverse value gap, fair value gap. We wait for either to get hit. We wait for either of those confluences to get hit, this recent ones we just marked out. Then we wait for a breaker structure again, meaning, you're like, well, didn't we already just do a breaker structure? Yes, but we're going to do a breaker structure to the opposite direction, right? So after we marked out, let me give you all an example. By the way, after the breaker structure happens, that's when we enter. That's when we enter. Also, once our confluences are hit on the 5 minute or 15 minute, based off of if our bias is aligned, we're going to mark out the confluences on those 5 or 15 minute. We're going to wait for those to get hit, and we're going to scale down to an even higher time frame, meaning if the 4 hour and the 1 hour do align, we're going to use the 5 minute for our breaker structure and our confluences. And then when we're about to enter, meaning we're about to buy or sell, we're going to scale down to our 1 minute. You're going to sell if you're in a downtrend, you're going to buy if you're in an uptrend. That's basically the logistics of that. So once this candle has come back into our zone, I'll show you right now. Perfecto, por favor. Right here, look. Look it, right? Boom. Breaker structure on the 5 minute. Perfect. Close your candle above this previous breaker or the previous high. Boom. That's our breaker structure. And then we mark it out immediately. Our fair value gaps and order blocks. We be patient. This hasn't happened yet. We wait for these candles to come back into our zone. Boom. Once that happens, we scale down to the 1 minute. Oh my gosh, it's gonna be so hectic because each candle is only open for a minute. Let's go back here. Let's go back here. Let's go back all the way back here. Boom. Look how beautiful this is, dude. This trade was beautiful today. We wait for it to come back into our zone, meaning the past this line right here was our fair value gap. We're going to get these mixed up, dude. The breaker structure. Okay. This is the breaker structure in the 5 minute. It looks a little different because there's so many candles. Don't mind this at all because you don't ever want to mark out 1 minute breaker structures unless we're about to enter. What we're about to get into right now. So we wait for price to retest back into our confluences on the 5 minute time frame. We scale down to an even lower time frame, the 1 minute. If you marked out your confluence on the 5 minute and your breaker structure on the 5 minute, that means your 1 hour and your 4 hour bias aligned with each other. But if you marked out your breaker structure on the 5 minute and your confluences, if you marked out your breaker structure on the 15 minute or your confluence on the 15 minute, that means you're going to scale down to the 5 minute once it retests back into that zone to enter. So, like I said before, each time frame is different. You're going to enter off different time frames based on your bias for the day. So if they don't align, 15-minute breaker structure, 15-minute confluence, 5-minute entry. If they do align, 5-minute breaker structure, 5-minute confluences, and then our 1-minute entry, right? So on the 5 minute here, we wait for price to come to that zone. We wait for it to come back into that zone. Once it hits any of these midways, once it hits any of these like midway areas of these fair value gaps or order blocks, we're going to scale down to an even crazier time frame, right? This is where everything gets hectic. This is where we take our money, not our money. Well, I mean, I guess if you really want to say it like that, yes, where we take our money, we enter. But you take your money out of your butt cheeks here, right? Booty bomb, bada boom. We're going to mark out a 1 minute break of structure. This is the only time you'll ever do this ever, is when you're about to enter, okay? Same thing here. On the 1 minute, it looks the exact same on the 5 minute. Literally looks the exact same, right? We're going to wait. We're going to mark out our previous high. What is a high? A move up, then a move down. And the highest wick of those 2 points. So not this part, the highest 2 points, right? And it looks the exact same on the 5 minute. That's literally a breaker structure, right? We're going to mark that out. We're going to wait for price to move down a little bit more. And then we're going to wait for a candle closure. It doesn't matter if it's 2 candles. It doesn't matter if it's 1 candle. Most of the time, it'll be 2 to 3 candles before it closes above it. But we wait for a candle closure. This candle closed up here, meaning we broke structure. Once we break structure to the 1 minute, we enter. This is literally where I entered, right here. Perfect. Candle closed, entered perfect here, right? Perfect. We entered there. We shot up. Don't be afraid. Number one, don't be afraid when you see price start to move down in the opposite direction that you entered. It's just trying to do a fake out. It's trying to scare a bunch of people. This is where a bunch of people were like, oh, heck no, I'm leaving this trade. I am leaving this trade, right? Once that happened, It broke up to the upside. We hit take profit. We come home with a dub. We come home with a dub, baby. Let's go. Let's go. Let's freaking go, right? So I'm gonna explain this again. We wait for price to come back into either of these midway zones on the 5 minute. We scale down to the 1 minute, and we're gonna mark out our breaker structure to the upside, or breaker structure in general. Doesn't matter if it's the upside or downside, depending on your bias for the day. If you're in a downtrend or uptrend, we're gonna mark out this previous high since we're in an uptrend, and we're gonna wait for breaker structure to happen. Meaning we wait for this candle to close. We have patience.
The market is open.
Whoa. Yo, who's shoddy? Why is she yapping? Right? What was she yapping about, dude? We be patient. We could have entered here, but let's say we entered here, we marked out this breaker structure, we started to see a green candle, a crazy high green candle, but it doesn't close. We enter. What if price moves down? What if it skyrockets down? We don't know yet because there was no breaker structure yet. There was no confirmed breaker structure, so we don't enter yet until we have a confirmation. Because you don't know yet. You don't know if it's gonna it can be right here. It can be above here. If this candle is still moving up and down, and it's above it, and you enter before it closes, what if the next candle opens and it shoots down? You don't know. You don't know because it hasn't closed yet. You have to have patience. That's what I mean by having patience. Just because it looks good at first doesn't mean it's always going to look good in the end, right? So you have patience. You mark out this breaker structure on the 1 minute after it hit your confluence. And then you're gonna wait for a breaker structure out of that confluence, right? So we marked it out. We waited, candle closure here, beautiful candle closure above. We entered here. We set our take profit just below this previous low. Or not below, it was more right next to it, but I already knew that profit wasn't going to go in that direction. And then we set our take profit above previous days highs. It's really a tongue twister. Wow. It really is a tongue twister. That was crazy sentence right there. Wow. Right? And you enter. That's where you enter. I'm going to go over everything again, break it down one more time for ya. But yeah, that's basically where you do it. And how do you what am I saying right now? I'm just yapping, bro. Oh my gosh. You guys probably heard me say thousands of words this session. I talk a lot, and I talk very in depth. I like to make sure you guys understand. If you guys don't understand, like I said, comment below. Let me know what you guys don't understand. Let me know what you're confused on so I can help you guys make another video and understand, go into more depth if we're talking about one subject. Like I said, this is a broad over, my whole entire strategy, basically what I do. This isn't a in-depth video on each different thing, what a breaker structure is, how to find it, an uptrend, downtrend, what time frames to look at it at, so mark it out at, you know what I mean? So if you don't understand, ask me. But first, before you do that, I'll always say, ask ChatGPT. Use social media to your advantage, dude. Ask ChatGPT. Literally ask him, be like, what is a breaker structure, and can you dumb it down for me and show me an example? That's all you'll need to ask ChatGPT. If you really don't understand, then comment down below if you really don't understand. And feel free to. Always ask questions. You learn better that way, taking in information from people that know what they're doing. Yeah. So we're gonna show you how to take. Oh my gosh, I can't speak. We're gonna show you how to set your take profit and your stop loss, right? So how I set my take profit and stop loss, I would say 99%, or if not 100% of traders that know what they're doing do. We're gonna mark this out actually, so you guys can see. Actually, no, we'll do this horizontal. Where's this horizontal line? Here we go. So it'll be across the whole chart. Whoa, that's really thick. That's how we like it. We like it thick, right? That was weird. I don't know why I said that. All right. I don't know why I said that. That's why this channel's not made for kids. All right. After we do that, we are going to. We're gonna enter, right? And you're like, well, where do I set my take profit and my stop loss? Hold on there, Timothy. Hold on, bruh. Where are we going to set our stop loss? We're going to set our stop loss below previous lows. So we're going to set it below lows. And the reason for that is because if we're in an uptrend, or if we're in a breaker structure, the likelihood that it's going to come back to this zone is low, but not impossible. It can always come back. But I promise you it would never come back past here if everything that you just did, marked out, was hit. If everything that just happened was hit, I can almost guarantee that it's never going to come back down here. So we're going to set our stop loss below these lows here, or these key level lows, whatever you want to call it. Lows, key levels, same thing. We're going to set it below. And we always want to have our, see, that's why I put mine up a little bit more. We always want to have our ratio, our risk to reward ratio, 2.5 and above. Anywhere from 2.5 to 4 is a beautiful risk to reward ratio. Mine for today was 2.64. Um, not terrible, but we could do better than that. But we hit take profit. We went home with a dub. That's all that matters. As long as we hit take profit each day, that's all that matters. Right. So that's where we're gonna hit. That's where we're gonna hit. That's where we're gonna set our stop losses is below these previous lows, maybe even down here if you want to. And then where do we set our take profit? Meaning once price hits above this certain part, it'll take you out and you just made your money. That's how take profits and stop losses work. Once it hits above that previous part you marked out for whenever you want your money to be taken out, it's going to take your money out instantly. So in this red area, you're losing money. In this green area, you're making money. Once it hits past that area, wherever you marked out, it's going to pull you out, and then all the money you just made is going to go right into your account. And then the same thing for if it starts to go into your stop loss area. Once it hits stop loss, it's going to take your money out instantly. This is very important. Stop loss and take profits is, I would say, top 5 most important things, if not top 3, if not top 2. Most important things you should do when trading. Not more aspect of learning, because it's not very hard to learn, but more important, I would say. All right, how do we set our take profit? Take profit is above previous highs, and you're like, well, where's our previous high? I don't see it. Our previous high from yesterday, our highest high point. See, like, perfect, bro. Oh my gosh, bro. Look, it's pinpoint perfect, dude. Oh my gosh, y'all should sub, bro. Sub and like, bro. Like, I'm just too good at this, dude. And you guys got a W mentor that's like keeps it real, bro. Please drop a sub, bro. Please. No, I'm just kidding. We're gonna target previous days highs, or whenever a previous high was. It doesn't have to be from yesterday. It can be whatever is in this zone. So whatever take profit should always be above these previous highs here. And we're just gonna look on the either the higher time frame, the 15-minute or the 1 hour. We're gonna look for a previous high, and then we're gonna mark our. This is really just a mark out. Your take profit and your stop loss will look different. How I mark my entry off of. Let me show you. Put y'all on ball, right? So if I'm targeting, or if I'm waiting for a breaker structure to the upside, like we did before, marked out our previous high, wait for a breaker structure. I always mark out the candle that closed above it, and look. There's short positions. Boom. It's little features on your trading view chart. It's beautiful. I love trading view. Meaning we'll wait for. You see this middle line here? That's where we enter, and this is our our green area, red area. Green area will always be when we make money. Red area will always be a very bad area. Never want to be red. Right? We can always use that tool to mark out. I always mark it out wherever our closure above this breaker structure was. I mark it out, and then I enter on this line. This is the exact line I entered. This is the exact line I left on. Perfect. Look, we hit this high here. Boom. We immediately went down. Boom. It went up earlier, but still, this is beautiful. Right. So we're going to scale to a lower time frame. Look for a previous high, and then that's where we're gonna put our take profit at. And yeah, that's where you're gonna put your take profit, stop loss. We're gonna go through everything again, right? We're gonna go over through it pretty quick. If you don't understand, you can always rewind the video to understand. Right. So step 1, always mark out your session open. So I always mark out 9:30 time frame with a vertical line. I always mark that out, and then I scale to the 4 hour. Wow, that is crazy looking. Check the 4 hour. Okay, we're in an uptrend. I don't know what the skip's about. Don't mind the skip here. This is weird. I always whatchamacallit, baby. I always check the bias for the day, 4 hour. You guys should absolutely too. When I mean you should always too. Uptrend on the 4 hour, beautiful. We're just finding our bias on the 4 hour. Downtrend, beautiful. It doesn't matter what trend we're in. We're just trying to find what that trend is. Okay. Boom, 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 bada beam, bada boom. Check our 1 hour. We're also in an uptrend too. Beautiful. Right? Once we do that, we stay on the 1 hour. Once we do that, we're gonna figure out, what this was. Go up. Where are ya, bud? Where are ya, buddy? Boom. We're gonna figure out what time frames we're gonna be using our breaker structures, our confluences, and their entries on. It's pretty easy. You should write it down in your notes on your phone, so that when you're trading, you'll have your phone right next to you to check. Okay, I just did this. What do I do next? Kind of give you a brief overview of what, kind of like a checklist, I guess, if you want to really put it like that. Right? We're gonna mark out our previous. If we're in an uptrend, we're gonna mark out lows that haven't been swept yet. So market opened here. The candle was open here, meaning this hasn't happened yet. Right? We're gonna wait on the 1 hour. We're gonna mark out our liquidity zones that you think is gonna get hit, or that is most likely gonna get hit because it's a low. Right? We wait for that to be hit. We scale down to the 15-minute or 5-minute based off of our 4-hour, 1-hour bias of the day, if they align or not. After you do that, you're going to mark out your breaker structure out of this liquidity. Liquidity was down here. Once it was swept, um, we scaled down to the 15 or 5-minute breaker structure. We're going to mark that out. Breaker structure, what a breaker structure is, it's a candle closure above a previous high. So this is our previous high. A high is a move up, then a move down. A low is a move down, then a move up. And we're going to mark out the highest wick of these two. What is a wick? It's the thing above or below a candle. That's why it's called a candlestick. We're going to mark out the highest wick of both, whether it's down here on a low or whether it's up here on a high. It doesn't matter. Between these two, it's the highest point. Between these two, it's the highest point. It doesn't matter what candle, what color it is. The highest point of your high and your low, okay? You're going to mark out your breaker structure. This works on selling and buying too. It's just a perfect example for today because, we're in a buying position. It was an uptrend. So we're going to mark out our breaker structure, wait for a candle closure above that. We're going to wait, be patient, wait for the candle to close and wait for a new one to open. That's when we know confirmation. That's when we know breaker structure. And that is when we can mark out our confluences. Because when it already happened, we already know that, price is going to come back down here. People are going to be like, oh my gosh, it's a red candle. We're going to sell. Boom. Once they sell, price is going to push in the opposite direction. We're going to buy. They're going to get stopped out because they're idiots. They don't know how to do anything, right? They're like really stupid. And we're going to hit take profit because, there's stupid people in the market. And if you're not stupid, that's how you make money. Literally, that's how you make money, right? So after our breaker structures hit on the 5-minute, 15-minute, based off, our bias for the day, I said it 40,000 times, but I'm trying to hammer it through your guys' head. Right after our breaker structure, our candle closure is above our breaker structure, this previous high. We're going to mark out our confluences, whether that's an order block. Order block is in an uptrend is a red candle before a bunch of green ones, and then in a downtrend is a green candle before a bunch of down or before a bunch of red down candles. We're going to mark that out. Fair value gap. What is fair value gap in an uptrend? Fair value gap is the gap between this first candle and then the last candles, whatever. It's going to be that gap. Whether you want to mark it here, it doesn't matter. It's just the gap between where price skipped sellers, meaning it was only green. Same thing for in a downtrend. As you can see here, we marked it out because this was the gap between these 4 candles. In a downtrend, you'll see that this is our gap. It's not the first candle or it's not the last candle. It's the gap between those. Meaning, in a downtrend, there was no buyers at all. We skipped buyers and we kind of just shot in the opposite direction. That is called a fair value gap. A fair value gap is when, again, price skips buyers or sellers, meaning we skipped a bunch of sellers here and there's a bunch of green candles. We're going to mark that out. The gap between these, or if we're in a downtrend, the gap between these 2 candles, right? We're going to mark that down, and we always mark the highest point and the lowest point of those wicks. That's what I do personally. People do it different, but that is what I'd use, or that's what I mark out, right? We're going to wait for price to come back to that zone, still on the 5-minute or 15-minute time frame, based off of the bias for the day, right? After we do that, we're going to wait for it to come back into our zone. This candle can still be open. We don't have to wait for another candle to open because it already is in our zone, right? Once it hits our zone, it doesn't matter if the candle's moving up and down or moving up. It does not matter, right? We're going to scale down to the 1-minute or 5-minute based off of what, Cheryl?
Based off your bias for the day.
Perfect. Perfect. I'll see you after class. I'll give you some Ozempic, buddy. Once prices hit either of our zones, we are going to mark out, because, this was already happening. This is our 5-minute candle. This whole entire thing is like basically our 5-minute candle. Basically. We're going to mark out our previous high. So, like, let's say this all happened, and this is our high right here. You're like, okay, I'm going to mark this out. This literally happened today. I'm like, okay, I'm going to mark this out since, price came into our zone. I'm like, okay, well, this is our previous high because it's a green then a red. It's really hard to see, but that's a green candle, barely a green. We're going to mark that out, the highest point of that, and we're like, okay, well, price kept moving down. Okay, well, we have a new high. We're going to mark out the most recent high in a breaker structure, right? We're going to scale down to the 1-minute or 5-minute based off the bias for the day. We're going to mark out our previous high. What is a high? Move up, then move down. What is a low? Move down, then move up. A red, and then a green is a low. A green, then a red is a high. And we're going to mark the highest point of these 2 wicks. Not the shorter one, the highest point. It doesn't matter if it's red or green. It doesn't matter, which is, you know what I mean? Just the highest point of these 2 wicks, okay? We're going to mark that out. We're going to wait for breaker structure or candle closure above this breaker structure. We're going to be patient. We're going to wait for it to close, and a new one opens. Once a new one opens, we enter. We set our stop loss below previous lows on higher time or lower time frames, meaning like anywhere from 5-minute time frame to 15-minute, anywhere below a previous low. So what is a low? A red candle and a green candle. I'll move down, then move up. That's a low. We're going to hit our take profit above previous highs, right? So there was no previous highs here, no previous highs here, no previous highs here, no previous highs here, no previous. Okay, we're in the 1 minute. We might need to scale to 15 minute. Boom. We look for the most recent high, or our most previous high that's gonna break above these. Cause like once we go in this direction, we're not stopping. Okay, we're gonna target previous liquidity zones, meaning here we're gonna target previous highs, and we're just gonna wait. Be patient. Do not be afraid. If we start to retest back into that zone, you're like, what zone are you talking about? What is bro yapping about? Give me a second. Give me a second. Give me a second. Give me a second. Boom. Bada bing, bada boom. Look. Don't be afraid, right? Boom. Oh my gosh. It's going in our direction we want. Oh my gosh. Red candle, red candle. I gotta leave. I gotta leave. No. No, no. We're good. We're good. We're good. Green candle, green candle. Giant red candle. Oh my gosh. We're about to break structure. We're about to break structure. We broke structure. Do not be afraid. If everything that you just marked out was hit to a T, a buttery smooth, what are those called? Those butter knives? Buttery smooth butter knife, smooth toast butter. If everything happened the way it happened, everything was hit, do not be afraid. I promise you, 75% of the time, no, no, just kidding. 99.9% of the time, price is going to go in the direction that you want it to go based off of the things that you marked out. And that is a fact. That is a fact. If you didn't do something right, price is not going to go the way that you wanted it to go. You control the charts, not the charts. The charts do not control you. And if price just doesn't do anything at all that day, then don't enter. You don't need to enter a trade every single day. Like I said, trading is patience. If you want to make money, patience, patience. You have to wait for all these to be hit in order to enter. You have to. Like, it's just how the market works. And certain things in life, I'm gonna get a little philosophical for you guys. Certain things in life, you don't always need a step by step. You can kind of just coast by. And there's certain things that you do need step by step. Like step by steps, for example, in life, you need to go to school. You have to go to school. Or what? What are you gonna do? Not go to school, drop out, and then work a 9 to 5 the rest of your life? No, you're gonna get a diploma. What you do with that diploma is up to you. I don't plan on going to college because I make enough money now that if I were to go to college, there'd be no point. I'd be in debt. If I went to a university, and I make enough money now than most people, so I don't need to go to college. But that's another story for another time. Things in life that you just coast by. You don't really need a step by step. I would say I don't know. I don't really know an example. I feel like everything's kind of structured in their different ways. Everything has a kind of step by step, but those step by steps kind of like merge into each other as you do it because you're so used to it that it becomes a habit, right? After doing something for so long, a step by step, it becomes a habit, and you don't need to really look at a checklist, right? Every time you learn something new, you kind of go by this checklist. But after doing it for a certain amount of time, you don't really need that checklist anymore. It's more of like merged together. I kind of know what to do. Same thing in school. Like whenever you're learning a like a new way to solve a problem, you'll kind of have like this step by step on how to do it. But after doing it for so long that by the time Friday test comes by, you don't need a checklist. You know how to do everything because you've done it for so long that it's kind of registered in your brain on how to do it. So that's kind of what trading is like, I would say. You just have to practice, 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 and don't practice on a real account. Practice on a demo. I always say this to beginners. This is what I would do. Literally, this is exactly what I would do if I was a beginner. Right? Open up an account off Hero FX. Open up a zero demo account. Deposit $100,000 of fake money. You're gonna trade with fake money for 3 months. Once that 3 months, if you can turn that $100,000 into $200 or even $250,000, once you hit that mark, then I think you can prove that you prove to yourself that you're profitable. And then from there, you can move to a funded account. Demo account was always free. You can always sign up. You have to be 18 or older. I'm 18, so I am of age to do that. A demo account. Um, Once you open a demo account, trade for 3 months. Once you can hit, depending on how much you deposited. When I first started out, I deposited 100,000 and I turned that 100,000 into 500,000 in 3 months. And it wasn't hard. It wasn't hard. You just have to grind. You just have to learn everything, and you just have to keep going. You have to be smart. Number one tip I'd give to a beginner trader is don't revenge trade, don't emotional trade. If something happens bad, you let it go. You walk away like nothing happened. You go listen to music. You go to the gym. Don't even think about it. Okay? If sorry, stuttering. That was a fake stutter. I was making fun of myself. I'm not that bad at stuttering. But if you take profit, if you win money for the day, good. Celebrate it for like, I don't know, 5 minutes and then go on about your day. Do not be so emotional with it. You may be thinking, well, like you're losing and winning money. I feel like you should be emotional. No, because that's what's gonna cause you into this spiral, this downward spiral of like, well, I just lost money, I need to make it back. No, that's wrong. Or you're greedy, you make some money, you're like, well, I didn't make enough. Let me make some more. No, you take your losses and your wins each day, right? And you leave it alone. Okay? Boom. We made two trades, you know, and we won. We won. These are both one trade. We took two trades in 2 days. And that's all you need. You just need one good trade a day, and that's it. The strategy is set up for, a 1 day, one strategy, type of trade, like a one trade a day strategy. You can use this multiple times throughout the market. If I really wanted to, I'm stuttering so much. Oh my gosh, I'm so tired. If I wanted to, I can, do the same thing over here that I did over here, but I'm not going to because the strategy is so good that I only need to use it one time a day. And you can absolutely use it multiple times a day. You can use it 5 times a day. But I always say to a beginner, take one trade a day. If you win, cool, cool, walk away. If you lose, that sucks, dude. That sucks so much. Walk away. It doesn't even matter. Forget about it. Journal your loses and your wins, your losses and your wins each day. Mark down the time, the date of what happened or what trade you took, what you could have done better, what you could have, you know, write down how much you won, how much you lost for the day. Um, and yeah, trading is very psychological. It's very um, like it gets in your head a lot. That's a side that people don't talk about, and a lot of times most of the times, people don't show their losses. And this channel is to keep it real. This channel is to talk about everything trading, all the wins and losses I'm gonna be taking. Today wasn't like a live one. I had some problems with OBS, so I couldn't record today's trade like live. But we are going to try to do that tomorrow if everything goes well. I trade in the mornings. I wake up at 6 o'clock, look at the chart, mark my liquidity zones, find the bias, wait for that to be hit, and then we follow the rest of the steps. Um, and I trade in the morning from 6:30 to 10:30. Um, and I just wait for the liquidity to be like, that's literally all I do is I wait, and then I wait for everything to be hit, and then I enter. If nothing's hit, I don't enter a trade that day. I don't, because that's the smartest thing you should do. If something wasn't hit, you don't try to go out of your way and be like, well, nothing was hit. I have to make money. I have to do this, right? No, you don't have to. You're gonna sit your butt away from your computer, and you're not gonna worry about it. Okay. Most of the time I trade with my friend Noah, my big dog Noah. His channel is njr.trades. It's njr.trades, all lowercase. Go check his channel out. He has some videos posted of him live trading his wins and losses. I also trade. Like we'll hop on a call together and we'll trade. So you'll hear us talking a lot. But yeah, go check his channel out. And yeah, if you don't understand anything, feel free to comment. I'll make a video on it. Um, and yeah, um, drop a like, drop a sub, the uh, the uh, the YouTube special, you know what I mean? What everybody else says, like, drop a follow or drop sub. I don't know. If you learned something, let me know what you guys learned, cause like I'm like very curious, dude. I love teaching. My favorite thing in the world. Could never be a teacher though. Could never be a teacher. This is more my aspect of teaching. But yeah, if you guys don't understand anything, let me know. If you guys did learn something, let me know. Um, and yeah, I'll catch y'all tomorrow if everything goes to plan. We'll show you guys a breakdown of everything that happens tomorrow. If not, I'm still gonna upload the video if we didn't make a trade or not. Cause I'm gonna keep it real with you guys. I'm gonna keep it like completely bone dry real of when the market opens to when I stop trading. So stay tuned for that. I don't know when this video is gonna be up. It's gonna be a pretty long video, but um, yeah, I promise you, within the next couple months, I'm gonna be the biggest person you know. I can almost guarantee you that. Um, I want to say by March, I have big plans. I plan on moving in with my boy Noah. Once he finishes high school, he's also 18 too. Once he graduates high school, um, we plan on moving together, making content together. So that's gonna be exciting. Me, him, and then there's some other people we plan on coming into our team. We're kind of building a team right now of people, of editors, and people that are not our film editors. About to say film editors. I was about to say film editors. What am I saying right now? I need to get some rest. But no, we're putting together a team right now. So for future, stay tuned for that. That's gonna be really cool. We're gonna do like in real life trading, and whips we're gonna buy, our new tours of our new houses and stuff like that. Just pretty bland, normal stuff that you know traders do, I guess. Like TGR, for example. By the way, this is TGR strategy. This is TGR strategy. This is not my strategy. This is TGR strategy, like to a T. This is the exact strategy I use. And people are like, well, he just sells courses. No, I I learned how I learned his strategy was that I learned every single definition one at a time. That is what I did as a beginner. I learned um, everything. I learned everything one thing at a time. After I did that, then that's when I started looking at people's strategies. I went immediately to TGR because there's so much feedback on TGR. I was like, dude, this might work. Tried it out. I think it was the first day I started trading. First day or like the first week or something that I tried it out, and I was like, dude, this works so well. So go check TGR out. I'm pretty sure you guys know who he is. And yeah, um, what I would do as a beginner, because what most of you guys do, right? I would open up an account with Hero FX, and Hero FX is a great broker. It's like one of the best in the world. Starting a demo account, right? Deposit 100,000. Turn that 100,000 to 250 to $200,000. And it's in fake money too. You're trading fake money. Um, but before you do that, learn everything. Learn all the confluences. Learn what time frames to trade on. Just learn the basics, man. Really learn the basics. Check TGR out. He has a 5-hour video. I tell it to all the people that are beginners. He has a 5-hour video breaking down everything that I did as a beginner. Um, After I do that, I would, trade for 3 months. And I know it's like, dude, I just want to trade real money. You have to be patient. You have to be patient. It's like the main thing of trading. Trade for 3 months. Once you're profitable, um, and you can flip that money. If you can flip $100,000 into 250,000 to $300,000, dude, you are so good. After that 3 months, I want you to move to a funded account where you can open up a real account, where you're trading real money. You can open up a funded account for 50 bucks, 100 bucks, 150 based on the account size. This account right here, this costs $100 off of Alpha Futures. Use code TJR. It's not my code, but it helps you out. Um, it's like 15% off or whatever. This is a 50 count. This is a $50,000 zero account. So I'm in the evaluation stage right now. What an evaluation stage is, you're proving to whatever funded you buy from, you're proving to them that you're profitable. So it's like a test. That's why I say trade on a demo until you're profitable, because you have to go through evaluations to prove to these funded, these prop firms or these like places that you buy your accounts from that you're profitable. So that's why I always say be profitable for 3 months before you open up a funded account. Um, and yeah, I would go from there. I would pass the funded account, get a payout, hopefully, between $5,000 and $10,000 real money. And also there's rules to these accounts. Like you can't go underneath a certain amount. Like my maximum loss limit is 49,000. Once I go below that, 49,000, this exact amount, then my account is gone. Whether I passed, the test or not, it's always going to be there before and after. I would get a payout. Once you make a certain amount of money, I'd get a payout of $5,000 to $10,000. I'd buy more funded accounts, kind of farm it, do the exact same thing, pass the evaluations, get more payouts, and then I'd move to a live account, which is what I have. I have a live account from Hero FX. The Hero FX account costed me $10,000 real money to trade with 100K leverage, meaning they give you that 10K plus that 90K to trade with. So you start off with $100,000 and you trade with that money, and once you go past 90,000, your account is gone, meaning your $10,000 gone, you wasted it, but you can also flip that money to a lot of money. So the difference between a live account, there's no test. Once you buy the account, you can start trading. There's no test at all. A funded account is so much cheaper. You get to trade with just the same amount of money, but there's tests and stuff, and a lot of people pass the test, and that's because they don't start off on a demo. Demo account is the beginner friendly way. It looks the exact same as if you were trading on a live account than you were to trade on a demo. So use that skills, use those to your advantage. And yeah, I should be uploading tomorrow if everything goes well. If not, I'll just break down the trade that I made tomorrow. And yeah, I will see you guys tomorrow's video. Stay tuned for that. Let me know how you thought in the video or what you felt. I don't know. Just let me know anything. And yeah, I will see y'all tomorrow. Peace. Here, we'll do a little segment before we leave every time. We'll do like a draw in each day. Why not? Why not? Wait, stay with me. Stay with me. I know you're about to leave. Don't leave yet. Oh, heck yeah, dude. We're gonna do like a little mysterious face, like, I'm not too sure. Alright, I'll see y'all later. And yeah, just learn everything that you can. Just don't overwhelm yourself. One thing at a time. Alright, I will talk to you guys later. Bye.